Hey everyone, welcome back to the channel. Corey here. Today I want to talk about Netflix. This is a really incredible stock. In fact, it was like less than $80 a share only about 5 years ago. So it's crazy to think of the upward momentum that this stock has generated over the last 5 years. And there's multiple reasons for that. However, let's stop for a second. And before we get into today's video, I just want to let you know that I'm not a financial advisor. This isn't financial advice. I'm just giving you guidance and coaching on strategies and stocks, but it is up to you to decide your risk management and how much you're willing to put into a trade or a trade idea or a stock, and which stocks you choose. I'm just giving you my opinion and my trades. It's my goal to help you achieve financial freedom, whether that's retiring early or just making extra cash on the side to supplement your income. My goal is to help you the best I can. I have a bachelor's degree in finance as well as psychology and data analytics. I absolutely love doing this. I've achieved financial freedom trading stocks and options, and I love it. I'm very passionate about it, and I'm happy. And I want you guys to be able to have the opportunity to live that kind of a lifestyle, which is why I created this channel. I've been in the stock market for over 7 years, and I spent over 6 years in college studying. And when I put that all together with trading in the market and being in school, not only did I realize I loved it even more, but I got so much better at it. So I want to share all of these good things with you on this venture on my channel. So if you're enjoying these videos, be sure to give me a thumbs up, subscribe, and tap the bell. And if you have any questions, put them right down there in the comments. Hey, we are looking at Netflix right here. And the first thing I want to point out to you guys, if you haven't already noticed, there is two very big demand zones right here and right here. A demand zone is basically where everybody really wants to buy the stock. And you can see here, the stock came up, it came back down, came up, came back down. It keeps retesting, and then it bounced off, came down again, and then we had the upward momentum. And the reason that is people are trying to get into the stock at this price. This is a price people wanted to pay back in January. They wanted to pay $550. And back at the beginning of January, they wanted to pay $485. That's what a demand zone is. It's when everyone is buying the stock at a price so rapidly it jumps up. And that's what happened here. And we have a fair value gap. Without making it too confusing, this is a topic for a different video, but this is a fair value gap right here. And then we don't really have any more fair value gaps. So the chances of Netflix dropping to 558 is a little on the low side of things, but the chances of it going to 485 is very low. Like, it's incredibly low because of this fair value gap and this one big massive green candle and all this volume. It will take a lot of negative news, missing the earnings. It'll take a lot of negatives for Netflix to break through all of that and get back down to 485. I want to point out I'm bullish on Netflix long term, like a year to 3 years or more. In the short term to midterm, I'm neutral. I think Netflix is going to consolidate between 600 and 630. Or 570 and 630, somewhere in this area for about the next 3 to 6 months. It could deviate slightly, but that's where I kind of feel like it's going. You have to understand why Netflix is so popular. And the reason is because companies like AMC, as an example, in theaters and Hollywood video, you have all these directors and movie companies and holding companies that send the films to theaters. Well, Netflix has basically become a Redbox and Blockbuster and Hollywood all in one. You had Redbox that killed Blockbuster, and you had Netflix that killed Redbox. And now Netflix is killing Hollywood in a sense because they're destroying the theater business like AMC. People don't go to the theater as much as they used to. Netflix now makes movies that go directly to its platform, series, television shows, special dramas, all kinds of proprietary content. So there's not really a need as there was before to go to the theaters. Now they have directors, production companies, holding companies, all kinds of assets that are making film and television directly and solely for their platform. And because of that, Netflix is the future of film. The only real competition Netflix has is Hulu, Amazon Prime Video, Disney, and possibly Comcast Xfinity with their premium on-demand service. But I think that even then, that is still a little bit of a long shot because Netflix is still the king of streaming television. I think HBO, along with Comcast, has a chance. They really have a decent chance, but other than that, that is it. And I don't mean to throw a wrench into Paramount and Showtime and things like that. But in reality, the big kahuna is Netflix, and the only ones that are really competing with Netflix is Hulu, Amazon, and Disney. So let's go ahead and look more into the financials of Netflix. And because of what I just told you and my belief, long term, I do not see Netflix going down. I am bullish. I could be wrong, but I am very bullish on Netflix, and I don't see it being out of the realm of possibility that this stock could, in the next 2 to 3 years, make its way to $700 or more. Let's go ahead and look at the financials, because you know me by now, and the most important thing when you invest your money into a stock, what is it? You guessed it, cash flow. It doesn't matter how good a company is on its fundamentals and its beliefs and the products that it wants to bring, or prototypes, or its vision, or its goals or projections. None of these things matter, because if a company is not profitable and doesn't have cash flow, it's not a good investment most times. In fact, almost all the time. Let's look at the year-over-year growth for Netflix. 7.97 billion, 7.93, 785, 816, 819, 854, 883. So we know their total gross revenue is steady for the last 2 years. So that's good. We look at their gross profits. It goes from 3.28, 314, 245. So they're losing a little bit of money in the last quarter of 2022, and that's probably due to expenses. Then they've got 3.36. They corrected it. 351, 361, 353. Again, very steady. A little bit lower this quarter than the previous quarter, but still right in the general area that Netflix has had for the past 2 years. Let's go ahead and look at pre-tax income. We see 1.62, down to 39.34 million. So in quarter 4, 2022, they lost a lot of pre-tax income. That was a lot. Then they're back up to 1.47 billion, then 1.67, then 1.91, then down to 1.15. So not as good this time, but their pre-tax income the last 3 quarters is still very healthy. When we look at their net income year-over-year growth, we have 1.44 billion, 1.4, 55 million. This was a really bad quarter. 1.31 billion, 1.49, 1.68, and just under 1 billion, 937 million. So again, this time they missed the estimate slightly, but still very profitable, might I add. This problem right here in quarter 4, 2022, I believe, was the whole limiting of password protection on family and friends, and that killed a lot of their profits, but they've then since corrected everything. Their EBITDA growth year over year is very healthy. If you look at it, 4.9, 5.2, 4.5, 5.2, 5.3, 5.5, and 5.34. If we look at the earnings per share, 3.2, 3.14, 0.12 is very bad in this quarter. 2.93, 3.35, 3.8, down to 2.5. What Netflix has shown is it can overcome diversity, and it can overcome a very poor quarter and rebound very nicely and still maintain its profits. I really would not be worried about the 2.15 EPS or just under 1 billion in net income year over year. The previous quarter didn't quite meet the estimate, but that is okay because they've brought on so much proprietary content, and they've produced so much content over the last 3, 4, 5, 6 months, and they've got a projection of content that they want to release and a lot of proprietary stuff on the way specifically for Netflix. I truly believe this upcoming earnings, they're going to meet or beat the estimate, and you see the EPS of 4.49 is significantly better than the previous quarter. Let me tell you guys something really incredible about Netflix and the tech sector that it's in. If they even just meet the estimate of 4.49, if they just meet that expectation, Netflix is going to go up drastically on earnings. If they beat the estimate, we might not see Netflix drop below 600 ever again. And let me show you what I'm talking about. Now, if I was to give a projection on Netflix, we could see it come up and reject, come back down, come back up and break 630 a little bit, come back down. And we're going to see some consolidation because we're leading up to earnings. And then somewhere around this area, about 3-4 days leading up to earnings, we're going to see the stock price start to come up like this. And then going into the after hours, it'll jump up. And if they beat the earnings or meet the earnings, it might drop a little bit and then come back up. We could see a price somewhere in 690 or in 670. Somewhere in this area is where Netflix could very well go if they beat the earnings. If they don't, when the price comes up in this area, it'll end up dropping back down somewhere around here. So if Netflix misses earnings, they're going to end up somewhere in the 575 to 600. If they beat earnings, it's my projection they're going to end up somewhere north of 650. Generally speaking, though, leading up to earnings, from here forward, starting right around the week of Tuesday the 9th, Monday the 8th, the stock price is going to consolidate and start working its way up. And then the following Monday, only a few days before earnings, it is going to go up and start making an upward momentum. Even if you have a small portfolio, you can still get in on Netflix and collect some juicy premiums. Let me quickly show you what we're going to do on Netflix here. You can see that there's a lot of resistance here. It's rejected the 630 mark or 627 mark once, twice, 3 times, 4 times at 630 now, 5 times as it approaches 635. A lot of rejection here. In between 625 and 635, there's a lot of selling pressure. And because of this downward momentum that we have here, and then all of this selling pressure, you'll see that the volume is below the average except for one candle, this big red candle, and all this selling pressure. So it is safe to say this week it is unlikely for Netflix to break 630 or 635. So to be safe, we're going to sell a 635 call, and to be extra safe, we're going to also sell a 640 call, which is right up about here. And we're also going to confirm this by checking the Bollinger Bands. Let's do that right now. And we can see on the Bollinger Bands, length of 20, standard deviation of 2, which is 96% data, meaning 96% accuracy. The daily chart is the best for weekly options. The weekly chart is the best for bi-weekly, tri-weekly, or monthly options. With a standard deviation of 2, the Bollinger Bands are saying 633 is the top and the bottom is 594.40. That means at a standard deviation of 2, it's 96% likely that the stock price will stay between this. Meaning if we sell a 635 call, we're $2 above 633, which means we have a 96+% chance of success. If we go with a standard deviation of 3, that's 99%, and it will also change the Bollinger Band. So if I change this to 3, this is a 90% chance of success. So a 635 is going to be very safe, and a 640 is going to be extremely safe and almost too safe because the premium is going to be a lot lower. But let's go back to a standard deviation of 2, and we can see that we want to sell this 635 right here. And we're going to go over to Robinhood. Going to click sell call. You can do this on any brokerage you like. It's the same thing. My expiration is April 5th. However, you can set any expiration you want if you're watching this in the future. Let's go ahead and set up a 635 call. If you have a smaller portfolio, we're going to click on 640, and that will net you a $50 gain for the week. You'll see your break-even price will be $635.50. However, I do prefer $1,000 spreads on Netflix or even 2,000 spreads. If you have enough capital to do a $1,000 spread, we'll click on 645. This will be about an $84 profit for the week. And you can see break-even price is $635.84. This gives you a higher break-even price, and it also gives you more premium. It's a lot harder for Netflix to go into the red with this much of a spread. And another reason why I like bigger spreads, which most other videos on YouTube won't show you, is because of how much money you're losing. If the stock price goes above 635, you'll actually lose less with a $1,000 spread, which is why you're putting up more collateral, as it's harder to lose money. Let me show you exactly what I'm talking about. If the stock price was to go to $638, you would lose $219. If we go to a $500 spread, and we get the price to go up to $638, you would lose $265. At $638, you will lose $245 instead of $219. That is a $26 additional loss at the exact same price because the spread is shorter. A bigger spread is a little bit safer, especially if you get out earlier, you'll lose less money. For example, if the price goes to $636.84, I lose $100. If it goes to $636.84 over here, I'm going to lose $125. It's a lot safer to go with a $1,000 spread as long as you know how to manage the trade. I'm going to go with a $1,000 spread. I'm going to click continue. And because of the power hour in the morning of trading between 9:30 and 10:30, I know Netflix will go up quite a bit. So I'm going to set it to 90, and I'm going to collect a $90 juicy premium, and the price is going to have to go above $635. We won't lose money until $635.90. When I sell this in the morning, I have to go $635.90 just to break even. So this is a pretty safe trade. If you guys want to be a little bit safer and you don't want to mess around with a delta of 14, which is really low considering the volatility is 30%, you can always go up to a 640 with a delta of 9. And if you do that, selling a 640 and buying a 650 will get you $53. If you sell a 640 and buy the 645, it'll make you $35. So if you want to do the 640, that is a little bit safer. You want to do 635, that's also fine. So if you're looking at Netflix in the future and these strike prices are different, only have to worry about one thing, and that is delta. So you really want to look at delta. If you see the 640 is a delta of 9, 635 is a delta of 14, both are okay. If the volatility goes above 50 or 60%, you'll want to look at a delta more in the 10 to 12 range. If the volatility goes above 80%, you really want to be under 10 to be very safe on a stock like Netflix. I want to show you guys how to manage a credit spread. You'll see this is a credit spread I have on Amazon right now, 185 credit spread, 185.95, $1,000 spread. And we're going to click on simulate the returns, and this will show you how a credit spread plays out. Even if the stock price goes up to say 182.40 right out the get-go, and then it jumps again to like 183.30, you'll see that you're in the red and in the negative $50. But don't worry about that, because as you see, time goes on and then you're in the green and still at max profit around noon on expiration date. And that is because it's losing its extrinsic value, which is theta. That's for another video, but just wanted to point that out. And if Netflix starts going down, then you'll be in the green. If you open up a credit spread and you notice the stock price drops like it has done here, and after only 1 to 2 days, you've made most of your profits, you can just buy to open that, and I'll show you how to do it. You're just going to go here to close your contract, and let's say it's only worth $5. You'll just close it for $5 like this, and you'll click review order and submit. You'll buy it back. There's no sense in waiting 3 days to collect $5 if you've already collected $40 in 1 day or 2 days. My rule is if I've collected more than 50% in the first or second day, I close it. I want to point out something that will be very helpful for you. If the stock price goes above the strike price of your credit spread, do not panic yet. It's going to depend on if you feel like the stock is going to continue doing that or if it's going to drop. And if you're selling a put credit spread, it's the exact opposite. We see here if Amazon was to go up to 185, my break even is actually 185.45. So if it was to go to 185.40, you can see right here at the tip, there's still green. I could get out at break even or maybe even making a couple of dollars, because that is my break even price. If Netflix goes right up to 185 on the first or second day that you're selling this, don't worry about it, because as you see here, the price will go all the way up. And then once you get to expiration day, you're still making 21 or maybe even $29 or $30. I want to thank you for stopping in and watching my videos. Thank you so much. I'm hoping I was able to help you. Be sure to give me a thumbs up, subscribe, and tap the bell if you guys enjoyed the channel and the content. And we'll see you on the next video. If you guys have any questions, be sure to put them in the comments below. I love and take pride in responding to all of your comments, as it's my goal to help you guys succeed. Thanks so much. We'll see you on the next video. And remember, let's grow our wealth together.